I've made over six figures in online entrepreneurship. And today we're talking about, is it time to buy or sell in the stock
If you're
market?
new to the stock market and investing, then you must know this information. So I tried to make this as short and as practical as possible so that this information helps you out. And I want to answer these very important questions. So in today's video, we're going to cover, is now a good time to invest in the stock market because it's close to record highs? And should you invest your money? So if you're going to invest in the stock market, should you do it all at once, like go all in, like right now? Or should you wait for a better buying opportunity? Like, should you wait for a crash? Or should you invest your money little by little, like piecemeal, like in intervals? And what should a beginner buy in the stock markets? And what should you do if the stock market crashes? Okay, so this is so important for you to understand because a lot of people, they just can't grasp this concept, but you have to understand this. By design, the stock market will continue to go up, which I'm going to explain further in a minute. So it's basically like how homes are more expensive today compared to 10 years ago, compared to 20 years ago, compared to 50 years ago, etc. So this year in 2025, the stock market has already made a record high 15 times. Okay, now here's a chart of the stock market, the S&P 500, for the past 50 years. So in the short run, can the stock market go down? And the answer is absolutely yes, it can. However, in the long run, the stock market will continue to go up. It's simply because of financial asset inflation. But I want you to understand what's really going on here. If you invest in the stock market just broadly, you're not going to get rich. Like, you're going to slightly beat inflation, which is great because that's better than losing to inflation, right? Okay, so what's the real rate of inflation right now? So listen, we're not going to go off the phony CPI figures. The real rate of inflation, so the money supply, that's expanding by 5, 6, 7, 8% a year. And stocks, on average, they return 8, 10, 12% a year, depending on the historical look-back time frame that you're working with.
It's always tricky to know, like, because, you look at when there's a dip and you're like, man, is this the best time to invest? And then, man, you could lose money so easily.
So if you want to attempt to get rich in the stock market, then you need to become a stock picker and try to beat the market, which I would not recommend to a beginner in the stock markets. Okay, so listen, if you're a beginner in the stock markets, I think that you should be going after something like an investment that's safe and reliable where you can put your money in and just watch your investment grow. Like, that should be your primary goal. And in that case, I would recommend that you invest in an S&P 500 ETF or an index fund. So essentially, you can buy a little bit of all the stocks on the S&P 500. So popular ones, I mean, you may have heard these. They're the SPY, IVV, VOO. There are multiple of these, and take your pick. So if you invest in one of these, then you're not going to lose a ton of money and you're not going to make a ton of money. You're just going to slightly outperform inflation in the long run. So ultimately, it's going to be a safer and reliable place to park your hard-earned money as a long-term investment. Now, besides an S&P 500 index fund.
Yeah, in terms of investing too, like I'm investing in the VOO, VTI, and some other individual stocks. But yeah, I mean, I see why, because you can save so much time too. Like, it's not one of those things that you have to be super, dialed in. It's just you can put your money in and odds are you're going to be okay.
If I were a beginner in the stock market, then I would invest in precious metals. Like, this is what I'm telling my friends and family. Like, I get this question all the time, especially recently. And this is exactly what I'm telling them. So you can invest in gold, silver, platinum, and other precious metals in the stock market. And if I had to choose one as a beginner, then I would go with gold. And the ticker symbol for gold is GLD. So the thing with silver is that it's not for the faint of heart. Like, I own a lot of silver on the stock market and in physical form. However, silver is a much smaller market and the price can swing up and down wildly. Like, it's very volatile. And I wouldn't want to freak out any beginners in the stock market, as it can go up 20% in a month and then down 10% in a week, up and down like a roller coaster, and it gets emotionally exhausting. So I would tell a beginner to stick with gold. Now, I want to show you the price of gold for the past 5 years, and this is per troy ounce. And when you compare it to the performance of the S&P 500 with stocks, then you can see that it's on par. In some years or in some decades, gold will do better than stocks. And in other years or other decades, stocks will do better than gold. But regardless, both stocks and gold, they just go up in the long run. That's because the government and the central banks, they just print more and more money and they devalue the dollar. So essentially, it takes more worthless dollars to buy assets, a home, food, stocks, gold, silver, etc. Now, here's the secret that more people are finally realizing and accepting, and I've said this before and I'll say it again. The United States government cannot allow the stock market to crash and stay down for an extended period of time. The United States government cannot allow a recession to last longer than a few months. Okay, why? Well, it's because the government is in a serious debt crisis, and the government is paying $1 trillion of interest each year, and the debt to GDP is above 100%. Now, if the stock market crashes and stays down, or if there's a prolonged recession, then tax collections would go down and the debt to GDP would shoot up. And that would further shake confidence in the US dollar. So the US government, they prefer a slow demise with inflation rather than a sudden financial collapse. So look, just look at it from the perspective of a greedy politician or a central banker. Then if you're in their shoes, then you would want to try to milk this gravy train for you and your friends and your family for as long as possible. And that's exactly what they're doing. So if the stock market crashes or if there's a recession, then the government and the Federal Reserve, they're going to come to the rescue with the money printers and zero interest rates, and they're going to prop up the stock market. So if the stock market crashes, just hold on tight and buy the dip. That's a buying opportunity. Now, with you having this knowledge, like knowing how the system works, knowing that this is a rigged system, and knowing that the government and the Federal Reserve, they have the back of the stock market and it's too big to fail. That's how it's classified. Should you invest all your money right now, like just go all in right now? Or should you wait for the stock market to go down, like for a correction or a pullback or a crash? And if so, how much? Or should you invest your money, like deploy your money little by little? Well, I'm going to be honest with you. There's pros and cons to each approach. I'll tell you what I'm doing, but just think about it like this. Like if you invest all your money right now, like you just go all in. If you do that and the market goes down, because in the short run, like who knows, it can go down. It can go down 5, 10, 15, 20%. If it goes down to short run, then you're going to be so upset at yourself because you could have gotten in at a much better price, right?
It's like the psychology of it too. Like you're always going to think there was a better opportunity. That's just human nature.
Okay, but if you wait for the stock market to go down, but what if, that's you just waiting on the sidelines and the market never pulls back, the market never crashes, then you're going to miss the ride up, right? Or should you invest your money little by little, like dollar cost average in? But if you do this, then you may not get the best price. You're not going to get the worst price. You're not going to get the best price. It's going to be somewhere in between. But let me just chime in about a potential retracement or a crash. So if the stock market, if the S&P 500 goes down 5%, 10%, 15%, the government and the Federal Reserve, they're not going to step in. Like they're not going to come to the rescue. If it does fall 20% or more, that's when they're going to be forced to take action. They might not go full throttle. Well, it depends on how severe the crash is. If it's a terrible crash, then yeah, they're going to go full throttle right away. But if not, then they're going to ease into the easy monetary policy. But in my opinion, like this is my approach. This is what I'm doing. I invest in the market little by little, just each month. Whether it's up or down, every month I just deploy some money into the markets. But I also do save some money, just dry powder, just in case of a correction or even a crash. Like I would buy the dip. So dips are buying opportunities. And I always have a long-term mentality. Just invest for the long run. The short term, that's just short-term volatility. That's just noise. Now, I do want to answer this question because a lot of people have been asking me this one. So
Yeah, it does seem like, man, if you try to just time things and go for the short term, I think generally people probably don't your returns don't perform as well. So to see something like this is pretty
You
cool.
invest, like if you're going to invest through this in the stock market, should you do it through a retirement account or should you do it outside of a retirement account through a brokerage account? Okay, so if you invest through a retirement account, like a Roth IRA or a 401k, then yeah, I mean, obviously the biggest advantage is going to be the tax advantage that you're going to experience. But the trade-off is it's going to be the access. And I got to point this out to so many people because you may not need the money right now, but you're not going to be able to touch that money until you're older without facing penalties. So if you're like in your 20s or your 30s and you want to have that option to use your money earlier, like to start a business or to buy a house, you know, it's going to be smart to keep some investments outside of retirement accounts. But listen, I completely understand that there are the special allowances for like a 401k or even the Roth IRA, the basis where you can take some money for, you know, putting down on a home. But yeah, I mean, if we're talking about a larger amount of money, if you're trying to put like a 10% down pay, 20% down pay, then you're going to need a lot more money than, you know, those special allowances. But essentially, use retirement accounts for long-term wealth and use brokerage accounts for flexibility. Okay, so I tried to keep this as practical.
Man, and that's the thing. I've gone back and forth about this topic too. Like, where should I put, you know, invest in brokerage or retirement? And I think at the moment, you know, I'm definitely in both, but it's more a thing of, okay, I value the flexibility very heavily. So that's kind of weighing in my decision to say, okay, I'm a lot more interested in the brokerage accounts just because I have that flexibility, even if I lose a little bit, because it's not in an account that pretty much, yeah, the tax advantages, if it's, you know, 401k or Roth IRA or anything like that, or, you know, you can either grow without paying taxes or kind of defer, you know, your taxes. So that's how I kind of look at it.
Straightforward as possible.
But if you guys like these type videos and want to learn more, click the video on the screen.